Ladies and gentlemen, boys and girls, and children of all ages, we're talking about right now. Market is open right now. Tech stocks is getting slammed, being brought down big time. And we're going to be, in this episode, we're going to be looking at some ways that we can find some bargains. So, ladies and gentlemen, if you haven't done so already, go ahead and make sure. Hit the subscribe button. Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button. Make sure you hit that like, subscribe, comment, and share button. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So, ladies and gentlemen, for the people who don't know, if you are catching this live, it's going to be a pretty, I won't say a long episode, but it's going to be longer than usual. The market is open right now. I have the rare opportunity to sit down and talk to you guys and girls about what's going to market. And it's one of the days that I love, a sell-off. I love major sell-offs and to see why they happen. I really don't care sometimes why they happen. I kind of understand why they happen, but we're going to be looking at some ways to find bargains. But if you are catching this live, go in the comment box. Let's open up the conversation, have a conversation. Let's talk about it and all those other great things like that. So, ladies and gentlemen, I'm going to go over here according to, let's go to CNBC first. Let's see what the market is sitting at right now. Got my water here. Where we are right now. I'm going to see. So the first thing I want to look at is see what we're looking at right now in the market. So I'll give me 1 second. I'm downloading something in the background. So I guess that's why my computer is going to be a little bit glitchy as we go through the day, but it'll be all right. Let's see here. Now, I know, for example, the markets are, okay, we got the major indexes. And just like I expected, the S&P 500 is down 1.9%. The Nasdaq is down 2.54%. And we have the Dow Jones Industrial down at 1.86%. So when I look at this, I look at all the major indexes. I say, wow, all the major indexes are down. Which indexes of the major indexes is down the most right now today? It is the Nasdaq. And as we know, ladies and gentlemen, these are the times where investors become rich and in wealth themselves. This is when you hit that's my new sound effect that I just downloaded. I just had to use it. But so when I look at this, I look at all the major indexes. All the major indexes are down. And then I look at the major indexes, and I look at the major indexes down. Which index is down the most? You got the Nasdaq. The Nasdaq is down the most. Now that we have the Nasdaq that's down the most, you got to ask yourself, what is inside of the Nasdaq? What carries the Nasdaq? So without further ado, I have my screen here. Where we at? Add to the screen here. Here is a list of the Nasdaq companies. And I got this off of NASDAQ.com/market activity. So this is giving me all of the stocks that are in the NASDAQ, and I have organized them for according to their market capitalization, meaning how big they are inside of the NASDAQ. So right here, let's run down some of the top companies that are in the NASDAQ. Number 1, Apple. You heard of that before? Sure. Number 2, Microsoft. Number 3, Google. Number 4, you have another Google. You got Google Class A and Class C. Then you're followed by Amazon. Then you're followed by Facebook, Tesla, Nvidia, a company, NVDA. That was a very big one. And you go all the way down to Adobe. You got PayPal that's in here. Netflix is in here. Cisco is in here. Pepsi-Cola. I never understood why Pepsi-Cola was there. Texas Instruments, T-Mobile. List goes on, right? These are the big boys. Luminaire is in here. Where's the Luminaire? How much is the Luminaire going for today? Starbucks is in here. Long list, right? So I look at all 3 of the major indexes are down. Which index is down the most? NASDAQ. Inside of that NASDAQ, what are the top weighing companies in the NASDAQ? For prime example, weight makes a difference because guess what? The NASDAQ has 100 stocks inside of it, but not all stocks are created equal. Sometimes they have more Apple, they may have Netflix. So looking at the market cap here, number 1 up here is Apple. Then we have Microsoft. Then we have Google. Then we have Amazon. Those are our top 4 companies inside of the Nasdaq that have been getting beat up the most today. So right now, Apple is at $142 that is saying here. It could have changed. Microsoft, $284. Google is at $2,700. Then we have Amazon at $32.98, almost $3,300. Then we have Facebook follow right behind them at $339. Now, when I look at all these particular companies, y'all give me 1 second here. Of course, can y'all hear my, okay, making sure everybody can hear me very well. Now that I have all these companies here, now I'm going to look at the opportunities that I will see here. So one of the ones I'm going to look at immediately is, I know Apple had traded up this year at $150, right? I know for a fact, because I hold Apple, I hold Microsoft somewhere, I hold Amazon. So you got to look at it. Microsoft was over $300. Apple was over $150 earlier this year. Then you're looking at, you have Facebook. I can't remember exactly what Facebook was at, but I know Facebook has been on a nice little run so far this year. When I look at all these companies, these are companies that have gone down 2%, 3%, 3%. All these companies have gone down, and they're dragged by the major markets, because guess what? It's not going to stay like this. By the end of this week, if not next week, you're going to see the market take a big rebound, and there you are. You can have your profits. This is something that swing traders love. Swing traders love to come in and find these opportunities and buy these opportunities now. These are the times of not becoming scared. Right now, the media is ran by bond yields, inflation, China stocks, what's going on in China, the bond yields, inflation, pandemic, all of this news. Y'all already know. Y'all might as well put 2 horns on my head, because that's how much of a bull I am. By the end of this month, we'll forget about it, and we'll be on to something new. We will get through the pandemic like we've done before, like we're doing already. We will get through the inflation problem, right? And we'll move on with the economy. And I'm looking at all these great companies that are on sale coming out of the Nasdaq. This is how I find bargains. Or I forgot who said this. I think it was one of the Rothschilds that said this, that said, buy when there's blood in the streets. So a day like today, when you're seeing all the major indexes down over 1.5%, that's blood. You're seeing all this blood, red, 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 red. Everybody's talking about, oh, the pandemic, bond yields, inflation, interest rates hikes. All of these things, and I'm guaranteed there's going to be something tomorrow. This is the opportunity. These are household name companies. I'm talking to you guys and girls right now. I have 2 phones. And both of them are Apple products. I'm talking to you guys and girls on my MacBook Air. This is when I do my podcast on. I have a MacBook Pro and I have a MacBook Air, right? My wife has a MacBook Pro. So these are companies that I know and use. So why would I not take the opportunity right now? You look at Microsoft itself. Microsoft is dominating the world itself as a global brand and a global iconic brand, started by Bill Gates and has been used by everybody and is currently being used. These are opportunities that I'm going to look for today. Hey, you know what? Maybe might want to have some more Apple. I might want to double down on my Microsoft, and I might get a little bit more Amazon. But definitely my Microsoft is probably my biggest one. Microsoft and Apple are the 2. Well, if I had to pick out of Microsoft and Apple, it would be Microsoft. Because I feel as though, my personal opinion on Apple, it's a $2 trillion company trading for $140. I get that. Microsoft is a $1 trillion company as well. But the thing about, I feel personally as an Apple consumer, Apple has lost its steam ever since Steve Jobs. Its ingenuity, it has lost that ever since Steve Jobs died when the iPhone 4 came out. Every time an iPhone came out, it was something new and spectacular. Remember when that iPad came out, it was something new. When the MacBook Pro came out, it was something new. It was 2 cameras. It was a touchscreen. It was a FaceTime. It was something that was new about it that drove the market, that made people excited to say, hey, let me try this. But ever since my iPhone 4 or 5, one of those, it's just kind of been, hey, we have a bigger screen. Oh, we're going to be faster. We're going to have a better camera. The color is going to look better. Not any type of, progressive things that I've seen come out of Apple like it was known for when it got rejuvenated back in the late 90s, early 2000s. When it hit with the iPhone, then it hit with the iPad, then it hit with the MacBook Pros. like, wow, these are great products, you're kind of seeing that kind of dwindle away. So if I had to pick one, it'd probably be Microsoft. Definitely, Apple is still a great company. I still love them. So these are the companies I'm going to look at today. When I see the broad market go down, and I especially see technology go down, that automatically sends off the red beam. Now, let me get into this question. Some people have been asking me big time. Let me see what y'all say in the comments before I walk into China. One question here. What's going on, Unpopular Thought? With my round of applause. Checking in live. He said, I just wish I had money to buy at my heart's content. Hopefully I'll get there one day. Okay, he just said that he wish he had money. That's very important. This is why cash is always a big point of portfolios. You know, when I manage portfolios, some people will say, Prince, you know, I got $1,000 or thousands of dollars in cash. Why am I sitting in cash? Why are you not working on it? Why are you not putting this cash? Because I'm waiting on days like this, right? Because cash is king in a down market. When things go on sale, guess what? They can call me right now and say, hey, at Walmart, everything in Walmart is 98% off. But if I don't have cash, that sale means nothing to me. That clearance means nothing to me. What's going on? That's my guy, Max B, always representing, holding me down. Max B, what's going on, my guy? Max B said, wait until the VR AR glasses come out. Okay, I'm thinking that's the product you're talking about Apple that's going to make, that's going to put out. Because think about it, ever since the iPhone 4, ever since Steve Jobs died, you haven't seen any type of ingenuity with Apple. What has been new? What's been the new trending thing with Apple ever since those things went away? Right? So later on today, I'm going to put this out there. Later on today, I'm going to be doing an interview with the CEO of HYLO, Halo, right? They are a agriculture drone spraying company. They're supposed to be on, the CEO supposed to be stopping by today, and they're taking on investors. So I'm going to be stopping by, talking to them later on today in a couple hours here. They're supposed to be on, so shout out to them. So anyway, you're right, Max B. We'll see when their product comes out and their competition. We want to see what Apple can do, right? So here we go. Now that we can see that all the major indexes are down after all that, now I want to put this, I want to caveat this to everybody that's out there, ladies and gentlemen. This is not financial advice. I'm not advising anybody out here saying, go buy this. This is the best company in the world. No, this is only financial literacy, financial education with my opinion. So please speak to a financial advisor for your professional help. I cannot give financial advice over the airways due to, I don't know your personal situation. You know, just like Unpopular Thought said, I don't have the cash right now. So it's all different. It can be different from everybody else. But if you are catching this live, ladies and gentlemen, hit the like button and hit the share button, all of the good stuff. So right here, now that I'm looking at these top companies here, these are, you know, great companies that have a nice little dip that we just spoke about. Now let's look a little bit deeper. Now, this is the time that you have your watch list. So let's go down to my watch list. You know, you see. One second. Let's go down to my watch list. Let me see. Here we go. Let's go down to where my watch list is trying to hide from me. Pulling up on my phone. So this is a time why you must have a watch list. When stocks come across that I like, love, want to follow for some reason, I build a watch list. And when I have days like today, when I see all major indexes going down, this is when I go to my watch list and say, okay, maybe this is the opportunity. Let's see what the companies are doing on my watch list. Maybe this is an opportunity to jump in on some. So let's take a look here. Let me go off my, there we go. Where you at? There you go. Okay. All right. Now that I'm gonna only am I going to look at the companies on my watch list. I'm going to look at the ones who's performing the worst. So a company that I'm following that's performing the worst right now, I'm not worried about you. Beyond Meat. I was following Beyond Meat. Beyond Meat is down 6%. STY is down 6%. Riot down 5%. Swear is down 5%. GNLN, this is Greenland. This is my guy. Shout out to Nick, who was recently on the show. His stock is down 5% today. Desktop Metals is down 4%. NIO is down 4%. GBTC is down 4%. CrowdStrike is down 3%. So the company that I'm following that's down the most today is ETSY, ETSY, right? So when I look at a company like this that's falling down the most, but we have a lot of them that are down. Facebook is down 3%. The ARK ETF, that's down. SI is down 3%. Fortinet is down 3%. Amazon is down 2%. Who else we got in here? Uber is down 2%. Luminaire is at 415. Okay, it's down $10. I didn't know it went up that high. Okay, cool. Apple is down 2 to 3% here. Enphase, it's another one that I'm following. Now on the reverse end, the company that I'm following that's doing the best today, which is a hard day, is Gap for ATV. So right here, ETSY will fall onto my hit list. ETSY will fall onto my hit list. Sorry about that, hit my microphone. And also will hit the top companies in the Nasdaq that are getting hit the biggest today. So this is why it's very important. All right, let me see what y'all say in the comments. There we go. Let's give it to, what is that, Chuck? Chuck is chilling. What's going on, Chuck is chilling? I think Chuck is chilling out there on the West Coast. You out there on the West Coast. What's going on, Chuck is chilling? He said, brother, long time, glad to see you. Glad to see you too, man. Glad to see you. Glad to see you back on the live. It's been a while since I've done a live like this during the day. I did a lot last year, but this is one of the rare few times that I had the opportunity to come on. So now we got Unpopular Thought. He says, of course, you can't recommend to buy the dip, which is common knowledge, and what the big wigs do. Oh, let me give him, where's my laugh at? I think this is it. So he's saying, hey, it should be common knowledge to say, hey, guys and girls, just go out and buy the dip or whatever, right? Buying the dip is something that's easier said than done. Buying the dip is something that people do, and they say, Prince, anybody can look at a chart and look at it and say March 2020 was a major dip that I should have jumped in on. But you guys and girls, remember, I was doing lives during the pandemic, and so many people, when airline stocks got thrown away, Berkshire, Warren Buffett threw away airline stocks. We saw all these stocks tanking. Everybody said, hey, the world is coming to the end. Go buy gold, buy some ammunition, and hide out. People wasn't very confident. When you say buy the dip, it sounds very easy, but it's harder to do. And even with my level of experience, I find myself becoming scared to buy the dip, right? I won't say scared, but I'm like, wow, was this a good deal, or what's going on? Things like that or whatever. So buying a dip, yes, it's common knowledge, but it's easier said than to be done. So the thing about it is that's why I'm live today, to remind people. Sometimes people need that mentorship and that sounding board to say, yes, you are right. You should be buying a dip. I kind of want to show my tie a little bit. Shout out to my cousin. She brought me this tie here for my birthday. I just hit my 37th birthday on September 18th. So it's common knowledge, but a lot of people may not do it. This is why cash is very important in a portfolio, because when a dip comes, like it will happen, this is the time you should be saying, hey, you know what? Let me go in and buy something. Now, something I like about Interactive Brokers, I know Interactive Brokers do this. Shout out to Interactive Brokers. Those are my guys. Also, shout out to M1 Finance. I know they do this. E-Trade and TD Ameritrade have been talking about doing this for a long time, but offering fractional shares. So for prime example, a share of Amazon costs $3,200. You can buy a fractional share. I can go in and purchase a piece of a fractional share of a company due to that, right? So here we go. That's my guy right here. What's going on, Keith Reynolds? My guy, Keith Reynolds. It's been a while. I think Keith is out there in San Francisco. I remember where everybody's at. Unpopular thought. I'm not really familiar with you all the way unless you change your name. It's my guy, Keith Reynolds. Keith Reynolds said, "What's up, Prince? Caught it live finally. Rough day out there, but there are discounts for sure. Shout out to you. Definitely appreciate it, man. Appreciate it. Glad to see you on. Catch me on this live. So we're going to look at some more discounts. We're going to look at some more discounts here, right? I'm going to pull up my wish list or my watch list again to look at some more discounts. Ladies and gentlemen, I'm going to make this right here, right now. I think Uber is going to become profitable in Q3. That's the third quarter. Q3, I believe Uber is going to become popular. Not, I said popular, I meant profitable. That's the big story on them. I've been following them for like almost a year or two now, probably about 2 years to say. And they were supposed to be profitable fourth quarter of last year. But what happened on the fourth quarter of last year is Uber turned around and the pandemic happened. The pandemic happened. They had to push it back to finally this year. Then all of a sudden, the CEO releases a 8K, make a major announcement and says, "Hey, everybody, listen. We may break even in the third quarter and we may be profitable in the fourth quarter." Why would they do that? Stock jumped up 11% when they did this. The CEO all of a sudden says, "We're going to break even in the third quarter and we're going to become profitable possibly in the fourth quarter." They're talking about being profitable somewhere to $100 million. Stock did this, it jumped up 11%. And I believe we're going to have a nice surprise. Maybe I might be wrong. But now everybody, all eyes will be on Uber when they do their Q3 earnings report. And if they become profitable, that's going to be a big deal. Because do I look back and say Uber's the best company in the world? No. But this is something that I learned in my career, my military career, and my life career. Sometimes, you know what? I'm just going to be 100% honest with you guys. 110% honest. I just came back from Texas, and this kind of relates to this. I just came back from Texas last week, and I was down in San Antonio to see my niece graduate Air Force boot camp. Shout out to my niece, graduating Air Force boot camp. So, of course, proud uncle goes down there. Being a proud uncle that I am, I go down there to support her. And while I'm down there, on my way down there, I get a call from a PR agent and says, "Prince, can you interview one of my clients, and while you're down there?" And I was like, wow, this is, talking about going to Houston. This is last minute. I don't really have the time to make this happen. I got to fly out on Wednesday. This is Tuesday when you're telling me this. I really got told Monday night, but I can't really make any moves until Tuesday. This is Tuesday that you're telling me this. And you want me to shoot this interview by Friday. That's the only day I have. So I got to get a production team together. I got to get all this stuff together to make this happen. I have to look up the person, all the good stuff like that. So I start making phone calls down in Houston. I need a production team down in Houston. I'm like, "Hey, Houston, calling around to some people or whatever." Guy answers the phone. A lot of people I'm calling, leaving voicemails. Some people I'm shooting emails. One company I called, the guy answers the phone. "Hey, this is such and such, such and such." I said, "Hey, I need somebody at this address with this type of camera to do an interview style for a podcast." Guy says, "Sure, no problem. I can do that. When do you need it by?" "Man, I need it in 3 days and Friday. Need you to meet me there at this place, blah, blah, blah." The person says, "Yes, I can do it." Now, Have I ever used this person before? No. Did I know them before? No. But they were the only thing available. Everybody else that I called, I haven't received a call back from. Some people want me to send them an email. I don't have time to email. I need to book this today, because if I can't get it done on Wednesday, I'm going to be traveling on if I can't get it done on Tuesday, I'm going to be traveling on Wednesday. I don't have time to try to book on Wednesday. If I do it on Thursday, I can't do it on Thursday because my niece is graduating. And Friday, that is the day of. I have to know this by Tuesday. Long story short, I only had one person that answered the phone, that committed to it, sent me an invoice, and was ready to go. Now, were they the best person? Maybe they weren't. Did they have the best prices? I couldn't check his prices because the availability. Now, Prince, you just told this big long story, told us your personal story for what? This person was the most available in a timely fashion, so I went with them. Ended up doing a great job. And it's the same thing. Sometimes you don't have to be the best. You just have to be the best that's available. So now look at this space of gig economy. And you got Uber, you got Lyft, you got who are the other ones there? You got Uber and Lyft and all these other people, right? And who is going to be that one person? You don't have to be the best in the world. You just have to be the best of where you're at for your current competition. If I went to go try for the Denver Broncos, I don't have to be the best wide receiver in the game. I just have to be the best while I'm there trying out, right? Against those guys. And in that situation, I look at the gig economy and I look at Uber is the best one of those guys. That's why I've kind of been following them. It's the same thing, and it's something that I missed out on with Facebook. Facebook came out, it went public. It was the first social media company that went public. I think they went public in like 2012 or something like that. Don't quote me on that. 2011, 10 or something like whenever they went public. This unprofitable social media platform. I said, man, you're crazy. MySpace just died. You got MySpace just died. You got all these other social media sites that went public, and not even went public, but they was fad. Facebook is a fad. Why would I invest to that? Social media, you got to think about it. At the time, you couldn't even go live on Facebook. At the time, not only could you not go live on Facebook, Facebook didn't even have videos. All you did was just write, and said, hey, with so many characters, and that was it. Now you're looking at Facebook turn into this whole phenom that it is in 2021. But I looked at it, I laughed at the industry, I laughed at the sector. I said, that's not a company I want to bet with for the next 30 years. But look at it. Now look at this stock that came out for $20 back then. Now it's over $300. How did that happen? You look at Uber the same way. You look at that industry. Do I think this industry is the best in the world and blah, 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 blah? Maybe not. But the case is, it is the best that's available in its sector. That's how I look at it. That was a lesson that I learned. That's why I did not get on the social media train. Now, after Facebook went public, they went and brought Instagram. Now you have Google brought YouTube. You got Snapchat that's public. You got Pinterest that's public. You got Twitter is public now. You got so many players out there in the game. But guess what? Facebook is in this space and it's dominating. So if you can dominate any space that makes money, and if you can turn a profit, you a bad son of a gun. That's just my opinion as of today. Let me see what y'all say in the comments. Oh, Keith Reynolds says, yes, sir, in the Bay Area. I knew it. He was out there in the Bay Area. What's going on, Keith? Over there on Twitch, we're live on YouTube and Twitch right now. So over on Twitch, Barless Occasion says, let's go. Definitely, let's go. And I don't know if you're a female or male. I'm not saying that it matters, but I can't say, hey, she said or he said. He said the best availability is being available, right? Stephen A. and Charles Barkley said all the time. That's very true, right? And it's like he put it in a sports context. If you're the best quarterback, like you look at Cam Newton in New England, he was the best quarterback that was available. So sometimes you don't have to be the best in the world. You just have to be the best that available in that space. I'm going to Houston. I need a production company. Did I have the best production company for the best price? I don't have time to figure it out. I knew one person that was available that said, yes, I would do it. Sent me an invoice, sent me a contract. I paid him his deposit. He showed up and did the job. The best that was available. That's how I feel that Uber is in that whole entire space over there. So, ladies and gentlemen, now I want to get into, if you have used Turo before, I used Turo for the first time. I want to get into this. I'm going to do a Turo review, and I'm going to cut this out to use later. I'm kind of segueing a little bit, but it's all right. And we'll get back into finding out discounts out here. Hopefully I spelled this right. It's Turo. Turo. Right? They're going public via SPAC. I saw that this company, Turo, was going public via SPAC. So for the first time ever, I've always rented cars every time I travel, and I've done the traditional. I rent the car from the airport, get off the plane, grab my bag, go over to the rental car place, and I say, hey, let me get my car. I sign a bunch of paperwork. I get the keys. I rent the car. I bring it back. So for the first time ever, I decided to try use Turo. So I was traveling to San Antonio. I got on a plane. I flew to San Antonio, and I said, well, let me see how much it costs to rent a car. The car I wanted to rent, or the kind of car I wanted to rent, cost about $500 for, I don't know, I think I was going to be there for like 4 or 5 days. I said, okay, $500. Let me see what this same car is going for on Turo. Turo, the same car was $150. I said, wow, this car is way cheaper. Wow, but I never used Turo. Let me try to use them. So I booked the car via Turo. I requested the car. So how it works is you go in, you see the car, and you say how long you want to use it. You write a note on what you want to use it for. And the owner has the option to accept you or not accept you. The owner accepted me. The owner says, hey, yes, you can use my car. I think it was like $150, right? I fly into San Antonio. I get to San Antonio. I get messages on my phone from the owner. They are DMing me telling me, hey, what airline are you? I'm outside by the airport. Boom. The owner gives me the car. He gives me the car. I look at the car. We do a walk through the car, make sure it's clean. I mean, as soon as I walk outside of my baggage claim, my car is there at the exact time I wanted it to be there. I get in the car. I drive off. I go to stop by a little restaurant. I love to go to Rudy's. If you've been out of San Antonio, Texas or whatever, everybody loves to go to Rudy's. Haven't had it in like 10 years. I go to Rudy's. I get the Rudy's. And I realize I turn the car off, and I realize that I don't have the key to the car. I don't have a fob to the car. I'm like, man, they forgot to give me the fob. I called a guy because they gave me their phone number. I said, hey, I don't have the key to your car. He showed up, gave me the key to the car while I was at the restaurant. You know, I gassed up the car. I used it the entire week that I said I was going to do. Gas it up, you know, nothing's wrong with the car. Now, when it was time for me to turn the car in, I met him at the airport. The guy met me at the airport. He looked over the car. He gave me the thumbs up. I gave him the thumbs up. He gave me a good review. I gave him a good review. And that was it. Right? Now, I'm going to give you the pros and cons that I wrote down of using Turo or not using Turo. The pros and cons. Where are we at in here? Where we at? Okay. So the good thing is, number one, it definitely was cheaper than the airport, because Turo, you're borrowing the car from a person who actually has the car, versus when you are an airline, you're a rental car company, you have to pay for parking fees, airport fees, transportation fees, all these other fees that are passed on to the consumer. So going through Turo was definitely number one benefit. It was cheaper. Two, I did like the convenience. Most airports, depending on the size of the airport, to get to your rental car, you might have to catch a trolley. You got to catch a trolley. Then you finally get to your rental car spot. Then you have to be in line. You have to wait, sign all type of paperwork. They might have the car. They may not have the car. They might give you a different car. You just never know, right? Now, with this one, I walked out of baggage claim, and the guy said, boom, I'm here. Here's your car. Drop the keys in my hand. So the convenience of picking up was definitely a big plus. So the convenience of picking up, and it was way cheaper. Number three, I always had contact with the owner. The owner gave me his phone number. I had, if I caught a flat tire, if I got into an accident or whatever, I had the owner's line right there, right? So usually when you rent a rental car, they give you some 1-800 number. And I remember one time I hit a deer. I think I was in Alabama, Mississippi somewhere. I hit a deer, my bumper flew off, and it was like pulling teeth to find some help. I had to call a 1-800 number. I ended up driving back to Pensacola, Florida with my bumper dragging because it was like 3 o'clock in the morning and I couldn't get no assistance. But with them, I had a direct line phone number. When I did not have that key, I was able to call them and he came by and picked me up, not picked me up, but gave me the key right away. So having the person right there. Number four, using the same person over and over. So when I dropped the car off, he said, "Hey, Prince, if you ever come back to San Antonio, you need to borrow a car, just hit me up. And you can borrow the car and, rent the car, okay, of course. But you can use the same person over and over and over if you frequent an area. So if I go to New York all the time and, I don't know, why would you rent a car in New York, especially if you're going to New York City? But if you're going to upstate New York, that would make sense. But New York City, you just get around with public transportation. But you can use the same car over and over. You know exactly who the car is. I mean, you know exactly what the car is, who you're borrowing it from, all those type of things. You know exactly what you're getting. So those are the four big plus that I loved about Turo versus my traditional way of renting. Now, number four, because all they're doing, they're just Uberizing the way that we rent cars. They're Airbnb, which Uber kind of started it. Do you have Airbnb doing it to hotels? Do you have Turo doing it to rental cars? Now, the bad side, right? So the bad side is, one, you just can't leave the car somewhere. So for prime example, if I have a flight at 3 o'clock in the morning, I can just drive my car up and just drop it off and leave the keys in it and just catch my plane. If I'm doing it with Turo, I have to make sure I stay there and make sure I'm there for the exact person. So I don't like that for per se. Let's say if I'm running late or if I'm running early, I have to wait until I meet that person there to check that car out, right? So if you have a person that owns a car that's a little bit late, that could throw you behind. Versus with rental cars, I'm used to just showing up, dropping the car off, letting people get it later on, everything being good to go. But you can't do that with Turo. You're not supposed to. You're supposed to wait on somebody, right? So the next thing, my little key issue. I had my little key. I didn't have usually the keys to the car are usually in the car with a rental car, but he forgot the keys, but he fixed it. So that was one thing. So that's about it. Drop off area and my little key situation. So dropping it off, making sure I had to check it out with somebody before I left. That was a little, but I did like the pickup side of the house. So definitely a company that I kind of like. That's my review on Turo. Now I've seen on the business side of the house, people saying, "Hey, buy a brand new Mercedes or buy a G-Wagon truck or whatever." They buy them and they just put them on Turo and they just rent them out and they use it as a business. I talked to the guy about that. He said he made pretty good money off of it. It may be a good business venture, something I may look into in the future. Could be. So on the business side of the house, I have seen people buy cars and just put them on Turo and just let them be rented. The business side of the house with that, you got to make sure you got the proper insurance. You don't know who you're going to get. You don't really get the people's driver's license. I think when I got there, I had to show them my driver's license to make sure they knew I had a driver's license. But say if somebody wrecks the car, if somebody wrecks the car, they need a replacement. I don't want to deal with all that heavy work. Of course, I would have roadside assistance to fix a flat tire. But let's say if somebody rents my Mercedes and crashes it and they need another car, I don't want to be the person to run out there, sit there they took my car and they drove it 2 hours away. I don't like that heavy lifting on that. Maybe there's a service out there that stops that or does something with that. You can buy a type of insurance. That could be it. But that's one of the things I look at. But of course, if you can just take your car, rent it to good people, rent it to the same people over and over while they come to the city, of course, that's a good deal. But that's my little rant and rave on Turo. Let me see what y'all guys and girls are saying in the comments. What's going on, Keith? He brought up DoorDash, right? Now this is the thing I don't like about DoorDash. The thing I don't like about DoorDash is it's a one-trick pony. right? DoorDash delivers food from what I've seen and know. No. So you look at Uber. Uber gives out rides. It has Uber rides. Then it has Uber Eats. Then it has Uber Freights. So it's three ways that it makes money. So when the pandemic hit, people wasn't catching rides. So people like Lyft, they started to really get hit. And you seen Uber Eats just shoot up to the top and carry the Uber company because they had Uber Eats. But if you were someone like Lyft who just specialized in rides, they had a hard time. So the same thing with DoorDash, they're one trick pony, and their stock, look at their stock. I think their stock is over 100 something bucks versus Uber is only like 45 bucks. And Uber makes more money than them. So how am I justifying paying $145 for a one trick pony when I can get a company that has three ways to do it? Because I don't hear DoorDash talking about becoming profitable, right? But I do hear Uber talking about becoming profitable because of right now, nobody in that space is profitable. So that's my take on that, Key. Max B. What's Max B saying here? He said Turo would be great. Oh, yeah. To displace the rental car, disrupt the rental car industry. Yes. Uber, it's like what Uber did to taxis. Uber disrupted. Just like what Airbnb did to, and that was I stayed in the Airbnb for the first time too. I stayed in the Airbnb and used Turo for the first time ever. Usually I'm always the traditional guy. I fly in, I go get my rental car, then I go to my hotel, right? So this was my first time doing the disruptors type thing where I flew in, I went to an Airbnb where I got my car from Turo, and then I got an Airbnb. That was my first time ever doing that. So you're right. Uber disrupted the taxi industry. Airbnb disrupted the hotel industry. Then you have Turo, who's disrupting the rental car industry. You know? So I can see that. So right here, Keith says, I know. He said, I have friends who believe so much in Turo. Yeah, that was my first. That's why I had to try it. Because I want to see. I hear they're talking about going public, but they're going public via SPAC. So I said, hey, you know what? They're kind of like the Uber and the Airbnb of the rental car industry. So let's take a look into it. Max B said can't pay for miles driven. That was one thing. I don't know that I knew from San Antonio to Houston is 3 hours. And I knew I was going to go to Houston, then back to San Antonio. That was 3 hours to get over there. That was 3 hours to get back. I knew I was going to be driving around San Antonio for a little bit. So I over guesstimated my mileage usage. But on Turo, I kind of told them like, hey, these are how many miles I'm looking to drive. And they rented out. They put their price out. I didn't use nowhere near the miles I said I was going to use. I think I used like 700 miles when I had told them I was going to use 1,200. So, it was good for them. Joyce said I will be using, what's going on, Joyce? Nice to see you in here. So Joyce says she's going to be using Turo when she travels. Nice. And that's my first time trying it. I travel pretty frequently. I stopped or slowed down traveling because of the pandemic. But I'm kind of turning back up on with traveling. And because when I do interviews, I've been doing a lot of virtual interviews, but I like to do interviews in person. I like to sit in people's offices and, or whatever, or I like to sit in my own studio and sit down with people and do interviews. Virtual is cool, but I like to get back out there and see people. So I think the last one I did, I was in Detroit with Mr. Michael V. Roberts, and the one I just did down in Houston was Mr. Chris Senegal. Very impressive real estate developer down there in Houston who's doing a lot of renovating. He pretty much bought the block. He bought his entire block for $1.2 million in the 5th Ward of Houston, which is a impoverished area. I was in the 5th Ward. They call it the Bloody Nickel. So I was down in the Bloody Nickel doing the interview. So I thought that was pretty cool or whatever. I won't say it was cool, but that was his area. He purchased his spot for $1.2 million. Then he had another piece of neighborhood that he brought an entire block. I want to say for $6 million. Don't quote me on that. Then he's developing some other stuff. So it was great to go down there and actually see it and to bring it to you guys and girls here in the next week or so when you guys get to see this interview come out slowly. So yes. So there we go. So I'm going to that's what I want to push on for you guys and girls to talk about was today, like today, I had to get off this live here shortly. It definitely been great talking to everybody, coming back on live during the day while the market is open. But I have to go take advantage of some of these portfolio inside of some of the portfolios that I manage. I have to take advantage of some of these days, like today is when I start to pull the trigger, right? These are days I go out and pull the trigger, right? What's going on, Brawlers Occasion? He said, good stuff to you too. I like my new sound effect. What y'all think of my new sound effect here? I like that, my little cash register thing, right? So I'm going to be getting back to getting you guys and girls that content of giving y'all this content and giving y'all those live reviews, especially when we go into this Q3 earnings, when we go into these third quarter earnings, looking at some of these third quarter earnings, and going from there. So for you guys and girls that don't know, I'm located here in Denver, Colorado, in the process of having my own registered investment advisory firm. And I do manage the assets of clients. I do manage assets and things like that. I'm a private wealth manager. And, like I said, none of this stuff here is, I don't want anybody to go out there and say, well, I watched Prince Dykes. He told me to go buy the dip and I brought the dip. Man, even though they've been saying that for 200 years, it'll be some crazy nutcase in the comments that'll say, Prince told me to buy the dip. And that was the start of the next stock market crash. Because I want you guys and girls to look at it in this way. When 2008 happened, everybody said the market was going to go even further. Even when we started to climb out in 2009, 2010, people said, oh, this is not the real rebound. We have to go back. This is not the real rebound, Prince. We got further to fall. We definitely got further to fall. And I believed that. And I thought that, right? And the whole time in 2010, 11, 12, I was scared. I was waiting on the next fall. Then realized from 2010 to 2021, the pandemic hit, we was in a bull market. I could have rode that bull the whole time. And now, why do I tell you this story? Because I believe exactly is what happened last year when the pandemic happened. We saw that big dip, that big fall. I think that big fall happened, and now we're jumping off into another 5 to 10 year bull market. A lot of people are saying, well, I don't know. You got the pandemic, inflation, interest rates, where real estate is too hot. This is, you got this and that. And those are the same things that were going on in the last bull market. How's the market crash? How's this is bad? This, everybody, Obama is coming in. Bush is going out. Obama's coming in. Gas prices are through the roof. The banks are filing for bankruptcy. All these noise that was going on that clouded me. I wasn't as bullish as I could have been. I didn't ride that bull. I was waiting on the next market crash. I was a little timid, right? But I wish at that time and that I could have recognized there was a bull and rode that bull. But guess what? I won't make this mistake again. Fool me once, shame on me. I don't know how to say and go. I don't want to sound like how George Bush did when he said, fool me once, shame on me. Fool me twice, shame on you. Fool me three. Yeah, I don't know what that is, but you just can't fool me 3 times. I remember when President Bush did that was hilarious. But anyway, that's what I want to talk to y'all about. Let me see what you got to say here. Unpopular thought. He said, even if you had brought at the top before the 2008 crash and you just held, you would be rich now. Yeah, you're right. Even if you could have held out. But those are things that are easier to say. Unpopular thought. I think I know who you are, but I'm not 100% sure. I don't know if you changed your name. I think I know you by another name. But you was here. If you are who I think you are, you was watching these lives in the middle of the pandemic, at the height of the pandemic, when they was hitting the circuit breakers every day to stop the market from crashing. You was here and you was catching these episodes. And while you was catching these episodes, you can see the sentiment was totally different. Everybody was saying, oh, here we go. Cryptocurrencies, and people jumping into crypto. People was thinking, oh, it's about to get worse, worse, worse. The end of the world is coming. Those things are easy to say. Investing is always clear in the rearview mirror. It is the windshield that is the cloudiest. Looking in the rearview mirror, looking back what happened. Oh, yeah, I should have I should have borrowed all the money I could and invested in 2008. I should have borrowed all the money I could and invested in March of 2020. But when you see the market slide, you don't know what the bottom is. You're trying to figure out what the bottom is. Is this the bottom? Is that the bottom? I don't want to keep buying and hoping. So it's easier to say than actually do because it's mental. We know what to do. We've all read the same financial books. We all took in the same financial classes. We've all gotten the credentials and certifications, but acting upon it is the thing that scares people. Unpopular Thought said, used to be LK Raw, and now, yes, I was watching. I made thousands. Wish I put in more. See, I knew he was LK Raw. I was like, I think this is LK Raw. He just changed his name. But LK Raw, you said you wish you put in more. Why did you wish you put in more? Because looking back, you was like, man, that was a great opportunity. But while you was in it, while we was watching those lives, and I said, ladies and gentlemen, ride the bull. I don't care. People like, Prince, pandemic. Prince, the airlines are shutting down. Prince, Hertz is going bankrupt. This company is going bankrupt. We had the CEO of Red Robin's come on. Everybody was so scared. But now you look back, you say, man, I wish I would have emptied out the bank. I wish I would have too. But when I was in it, and even though I've seen it before, and even though it's trained, it's harder to say than do. And I will tell you this, ladies and gentlemen, I do not trust any investor, or I don't put any respect on any investor that hasn't gone through a bear market. Like they always say, I remember this conversation I had with NFL All-Pro LaRon McClain that we did an interview here. He said, when the lights are bright, it's hard to see who's really with you because the light is shining in your eyes. When you're out there, you're making millions of dollars and you're running a football and you're an athlete, you're making millions of dollars, you're getting all the girls, everybody wants to talk to you, everybody wants to be your friend, everybody wants to hang out with you. It's hard to see. All the deals are coming to you. It's hard to see what's real. But when all that stuff dries up, like this, that's when you're going to see who is made out of what. It's easy to have a relationship with somebody when all is well. But it's those dark times that's going to tell you who you need. When you're doing good in life, you're going to attract what you want. But when you're doing bad in life, you're going to attract what you need. People say it all the time. Whatever your significant other, I always hold that true. It's easy to love somebody when they got a great job, great company, business doing well, they're young and vibrant. But what if they got sick? Are you ready for that? Are you ready to take care of your spouse if they're sick, wasn't doing so well, with their money dried up? So let me see what BG is saying here. BG said, what's going on, BG? I don't think I know you, but let's give you a round of applause for being here live. BG said, you talked about Fortinet last summer and I made quite a bit. You're right. You know what, BG? Let's go ahead and be honest. I'm going to tell y'all what I did with Fortinet. I did a comparison. I did a show on cybersecurity, how it was going to be the big thing. I jumped into Fortinet, right? I looked at the finances of Fortinet. Fortinet finances are Fort Knox. Amazing finances. Amazing finances. The company just wouldn't move. Had a low beta. Wasn't really making much money. Then I had the competition that was on his heels was CrowdStrike. I did a show comparing Fortinet to CrowdStrike. CrowdStrike finances looked nothing like Fortinet. Fortinet had the best fundamentals, but Fortinet was barely moving. And I had Fortinet. I think I had a little CrowdStrike too, but that CrowdStrike was just jumping and running and running and running and running. And I said, man, I feel like I'm wasting time with Fortinet. I decided to get out of Fortinet and go to CrowdStrike. Went to CrowdStrike. Happy man. Doing good. Then I look back on Fortinet. Fortinet all of a sudden just started going crazy. Not too crazy, but it did very well. Now CrowdStrike did well too, but I wish I would have kept and held on to my Fortinet. Fortinet had amazing. It was an industry, cybersecurity, amazing finances, little to no debt, piles of money all over the place, making all type of crazy money. But the stock wasn't moving. I was just watching. It was like the turtle. It was just wouldn't move. But I should have went back to what Warren Buffett always said, the patience. I was like, man, this company's not even really moving, but look at this competition. Look at CrowdStrike. Its finances don't look that good, but look how they're doing, and so that's my little honest thing there. I wasn't as patient with Fortinet as I should have been. I left Fortinet for CrowdStrike, even though CrowdStrike didn't do bad, but I should have stayed with Fortinet. But I'm glad you did, BG. Glad you made some money off of that. Good on you on that. BG, he says, I only listen to your podcast, though, not your lives. Found your live today. Okay, good. Yes, those podcasts that you hear are usually my lives. Like this will turn into a podcast. So usually these podcasts are live where people can talk and interact, some of them, and then they turn into the podcast. So I give some people like the video where they like to come in and talk and see me talk about things. And some people just like to hit the play button, just listen to me say it. So I do both. All right. He said, I brought Palo Alto still in. How do you feel about that one? That's the Polo was the let me think. It's out there in Silicon Valley. I gotta look into that company again. I gotta look into them again and do another episode on them. All right. Because I remember talking about them before. I know they're Silicon Valley type company, but I gotta look into them again and see what they're doing. The networks, like they're supposed to be like in somewhere in cybersecurity. And BG says Palo Alto Networks. Yes, I definitely believe in that company. I definitely heard their name. Cybersecurity space. I think maybe I did an episode on them. I don't think I did. I think I was kind of focused on Fortinet and cybersecurity. But I have to look into them. I have to look into their finances, see what they're doing. And because sometimes it's not about the company. It's about how much do you cost and what is your competition doing at the same time. Like CrowdStrike and Fortinet. Fortinet was a great company, but CrowdStrike was just making more money. It was going up in value of the stock. And CrowdStrike was making more money, but Fortinet was that juggernaut, still is, their finances. So I had to compare you with your competition. That's how I look at companies. I like to I keep you in your box and say, okay, well, who else is in here doing the exact same thing you're doing? What is their poise? Who's better? Who's making more money? And that's what I do on the lives. So I have to look, I have to see. Maybe the competitions came behind them. All right. Well, ladies and gentlemen, I got to get running. But I definitely thank you guys and girls for being on live. Shout out to my cousin Jennifer for buying me this tie here that I'm wearing that y'all barely can see, that my microphone is probably covering up. Thank you guys and girls for tuning in. Ladies and gentlemen, hit that like, subscribe, comment, and share button. If you haven't done so already, make sure you go over and check out my book series, the Wesley Learns book series, world's first children's investment book, or investment book for children. Wesley Learns to Invest, world's first not investment book, but a book about insurance. Wesley Learns about insurance, and Wesley Learns about credit. Support those projects. Those are the projects I put out there. Support those. They're available hardcover, paperback, audio, and ebook. You can download them. You can do all type of stuff. They're on Audible. They're everywhere, Amazon, all that good stuff like that. And check out the podcast. The Investor Show. We're available everywhere that you can find a podcast, and also on Instagram and Facebook as well. We're just live on Twitch. So check us out on Twitch and YouTube. So follow those and I follow back. All right. Cool. Until the next video, podcast, cartoon, or whatever else crazy you see me doing around this beautiful globe. My name is Prince Dykes. I'm the Prince of Investing. Until the next video, podcast, cartoon, peace, be safe. I'm out and